Investors fled the Singapore stock market in a frenzy today, dragging the benchmark index to its worst showing in over a decade. The fall came after Singapore reported its first 2 COVID-19 deaths over the weekend.
All right, so let's take a look at how it did. So within minutes of the market opening, the Straits Times Index plummeted by nearly 8%, and it closed as Asia's worst market performer, having tumbled 7.35%. That's its biggest single-day drop after the record plunge of 8.3% during the global financial crisis. The STI's components also suffered staggering new lows. As mentioned, Singapore Airlines touched down nearly 11% lower after it announced a slash to its capacity today. SATS also shed nearly 13%, wiping off close to 8 years of gains. Meanwhile, Genting Singapore sank over 9% to its lowest in a decade.
Now, for a closer look, we're joined by David Kuo, co-founder of The Smart Investor. David, Singapore's STI is the worst Asian market performer today, hitting as low as 8.4% to suffer its worst decline, in fact, since 2008. What's happening here? What are the main reasons for this?
I think it's partly, Steve, that Singapore investors tend to be a little bit more sophisticated. So really what they're saying is that we look at the problems that many companies are facing, and we know that the first quarter results are going to be awful, and the second quarter results are going to be pretty dreadful as well. And ultimately, they don't really know when there is going to be some kind of recovery. I mean, ultimately, when you have a look at these company results, the revenue is going to be absolutely decimated. There will still be a cost. So therefore, when you have a look at the profits, whatever profits there might be, it's going to be pretty meaningless. And so therefore, investors are saying, let's just take our money off the table now, and then we'll come back a bit later on. I think the thing we need to remember, Steve, is that when stock markets fall like this, they go down in an elevator and they come up by the stairs. And so therefore, it's going to be a very long, drawn-out process to get back up to where we were previously, and some people just haven't got the patience.
Well, David, you mentioned that you don't know when the recovery is going to be. So the question is the worst over, or will there be more to come?
I think that is the trillion-dollar question, and maybe $1 trillion is not really quite enough to answer that question. We are seeing governments all around the world pumping inordinate amounts of money into the market, into their global economies. I mean, the Federal Reserve is going to be pumping whatever it needs in order to try and stabilize the markets. But it's not the markets that's the problem. I think it's consumer confidence. It's also whether or not, companies will be able to emerge from this crisis in some form, whatever form that's going to take. And then finally, we have this question about healthcare and vaccines and whether or not a vaccine will be available. So it really is a three-pronged answer. First of all, governments, central banks can do something in order to try and stabilize the markets. Then we have to try and work out which are the companies that are going to survive, how many jobs are going to be lost as a result of this. And then finally, people are keeping their fingers crossed for some kind of treatment or vaccine.
Well, let's turn our attention to the Singapore dollar, David. It also fell to a 10-year low today after the MAS said it will bring forward its monetary policy decision. Tell us your thoughts then. Recession all but inevitable?
Well, that again, is another trillion-dollar question. Personally, I think that, Singapore's economy is pretty strong. I think that there are ways in which, the Singapore economy can grow. When you have a look at consumer spending, I would say, it hasn't exactly fallen off a cliff right now. I still see people going around doing the normal things that they do during the day. And I also think that, the government can step in and try and do a bit more government spending. I mean, ultimately, you've got 4 levers in which you can pull in order to get an economy growing. I mean, the most important, of course, is consumer spending. As long as that holds up, that's going to be pretty good. And the second one is private sector spending. Will the private sector be able to invest in their own businesses in order to grow the economy? Then you have government spending, and then finally you have net exports. And I think as far as the net exports is concerned, we can probably put a line through that and sort of say that that isn't going to be very strong. So we still have the consumers. So Steve, I think you and I have to go out and spend, and you, Glenda, we have to go out and spend as much money as we can whenever we can.
All right, David, I remember speaking to you last week, and we mentioned that, what the market actually wants is a vaccine. But we know that's not going to happen anytime soon. It's not going to happen tomorrow. We also know that the stimulus packages worldwide, has not managed to stem the beatings in the markets. The U.S. Fed, for example, you mentioned their new measures failed to lift the Dow Jones out of the red. What else can be done besides us spending?
Well, I think governments need to step in. I mean, ultimately, they are the ones, with a lot of money. And when we have a look at Singapore, we know that Singapore has a huge amount of reserves. So therefore, Singapore is in a better position than many of the other economies. But as far as other governments are concerned, well, what they are doing is they're going to have to borrow. They're going to have to borrow like crazy. And so therefore, people are saying that government deficits are going to be huge in 2020 and maybe even 2021. And so governments will need to step in because ultimately they are the backstop. They will need to sort of step up to the plate and say that we will do whatever is necessary in order to try and sort of stabilize the economy in some ways. So I know that's a very long-winded answer, Glenda, but ultimately I think it really sort of relies on governments to do whatever they can in order to try and sort of boost consumer confidence.
All right, always very good to speak to you. David Kuo, the co-founder of The Smart Investor.